Call the meeting to order. Doug, could you do a roll call?
Since we have a new commissioner here tonight, Commissioner Castle, thank you. The way it's going to work tonight is we're going to call a roll call first. It will not include Commissioner Castle. After we call the roll call, we'll have Eleanor Manzano come back from City Clerk to swear you in. And then we'll do a second roll call and include everybody. Okay? Commissioner Conroy?
Here.
Commissioner Jesse?
Here.
Chair Woodham?
Here.
Commissioner Marin?
Here.
Commissioner Samples?
Here.
And absent is Commissioner Solomon. So now we have City Clerk Eleanor Marzano. She was going to swear in the new commissioners. Actually, it's going to be both Commissioner Castle and Commissioner Jesty.
I guess I need to put the mic on. And then stand right here. You can just face towards the camera. Okay. And if you please raise your right hand and repeat after me. I state your name.
I, Jeff Castle,
Do solemnly swear
do solemnly swear
that I support and defend
that I support
the Constitution of the United States
the Constitution of the United States
and the Constitution of the State of California
and the Constitution of the State of California
against all enemies,
against all enemies,
foreign and domestic,
foreign and domestic,
that I will bear true faith
that I will bear true faith
and allegiance to the Constitution of the United States
to the Constitution of the United States
and the Constitution of the State of California.
and the Constitution of the State of California.
Do I take this obligation freely
So I take this obligation freely,
without any mental reservation
without any mental reservation
and purpose of evasion,
and prejudice,
and that I will well
and that I will
and faithfully discharge
and faithfully discharge
the duties upon
the duties upon
which I'm about to enter.
which I'm about to enter.
Congratulations.
Thank you.
Okay, so I'll need you to sign this,
Okay.
and you're now officially. Sign right where it says your name. Thank you. Sign here. Sign yeah.
Thank you.
There you go. Congratulations. Thank you.
You guys are officially on the payroll now.
If you did it last time, we don't have to, it's 2 years. Yeah, you're fine. Okay, great.
Thanks.
Thank you.
Historically, we've given each new member 10 minutes for a speech, so I think we'll pass that tonight. Okay, we're ready for another roll call?
Yes. Commissioner Conroy?
Here.
Commissioner Jesty? Commissioner Castle?
Here.
Chair Woodham?
Here.
Vice Chair Marin?
Here.
Commissioner Samples?
Here.
And absent is Commissioner Solomon.
Okay, next item is a salute to the flag. Let's stand. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Next item on the agenda is the approval of the order of agenda. Do I have a motion to approve the order of agenda?
So moved.
I second.
All in favor?
Aye.
Motion carries. The consent calendar You see items F1, F2. Do I have a motion to accept the consent calendar?
Motion to accept the consent calendar.
Second.
One quick question. I was confused on something on the minutes. Doug, maybe you can clarify this. I don't usually read these things all the way through, but on the second meeting, September meeting, we have, back on page 13, item F1, we had something about the posting of the Special Budget and Finance Commission meeting. There are 2 times where this was listed here as item was considered out of order. I didn't, and then immediately after that, it says it was approved with no objection. Is there something, why did we do that?
I don't believe, I don't recall anything being out of, that was considered out of order at that meeting. It could be something that the person doing minutes in error on her part. We could recognize that error tonight and just recognize that it should be revised and that should be removed.
Why don't you take a look, if you get a chance, take a look at the tape and see if that should be corrected. It's a nitpicking point, but someone might raise it, so. I mean, those 2 items where it says it was ruled out of order and then it was passed, maybe that both those should be stricken.
Sure, I believe so.
Okay,
Chair,
yes.
could we reopen item D briefly? Because we have guests here tonight, I wanted to propose that we move item J2 up ahead of item J1.
Certainly. That's a motion. I have a second for the motion.
Second.
All in favor?
Aye.
Good.
For the record, can we repeat the motion? So that's a motion by Commissioner Conroy and a second by Chair Martin, Vice Chair Martin, excuse me.
And that was passed. I think before we step into that, we passed over public participation on non-agenda items. Do we have any, there's no one here. Do we have anyone on Zoom or online?
We do not have any Zoom comments and we do not have any e-comments.
Okay. That being the case, then let's move on to item J2 and turn the meeting over to folks from Cosmont.
Good evening, Mr. Chairman, members of the... There we go. Good evening, members of the Budget and Finance Commission, Mr. Chair, members of the Commission. Congratulations to the new commissioners. Wish you best of luck and prosperity in this new assignment. Cosmont Financial Services has a long history with Redondo Beach, most recently as related to this commission and as related to public financing. We worked, as you know, collaboratively with this commission to achieve an issuance of about $226 million of pension obligation bonds, really lease revenue bonds, to restructure the pension debt, and saved about $100 million for the city. No small accomplishment, so congratulations to all of you. You had the vision to make the recommendation to the board. We're here tonight on a much different matter. My name is Larry Cosmont from Cosmont Financial Services. You also have Dan Masiello, Senior Vice President from Cosmont. We're a 30-plus year firm specializing in public finance, economic development, and real estate. We've had, as I said, the privilege of working with you on a number of initiatives related to capital improvements, pension obligations, lease revenue bonds. Tonight's discussion, which will be really led by Mr. Masiello, is about what I call sort of the future deliberation of many communities in California, is how to capitalize, how to finance and execute on capital improvement projects. It's no secret that most cities have challenges, not only balancing their budget, although Redondo's been in very, very good financial shape. They too have their budget stressed like most communities. And as a result, larger projects, important projects for the community, public improvements, amenities, waterfront improvements, and so on, often become hard to sort of grapple with every year. But from time to time, cities really make an attempt to take a look at their capital improvement program and figure out if they can use the financing market to their advantage. Well, I'd like to say this is like a bad version of a Frank Sinatra song, what a difference a year makes. We were back in last June when we were in the market, we were able to secure, 2.8%, 24-year taxable financing. And Mr. Masiello will give you the news tonight in terms of where that is, but it's not near that even on a tax exempt basis. So it's, we're in a much different market, but these are, and I'm a former city manager in a number of cities. These are longer term perspectives. When you sit here tonight, you deliberate on financing issues that matter today, but you're also balancing that with, a strategy for financing improvements for the future. And so that's the conundrum, that's the equation, and that's the desire of the community. So I'm going to ask Mr. Masiello to walk you through a very short presentation on the context of the marketplace, as well as the list of potential improvements that you could consider. As you well know, your role and responsibility is to evaluate this and make whatever determination and recommendation ultimately to the city council that you think is appropriate. We're here to answer questions. We work for you. So any support we can give you, any information tonight or going forward, we're available to do that. Thank you. Dan?
Thanks, Larry. Good evening,
Just a
Commissioners.
moment. Just so the commission understands, we're being asked to review this, make recommendations to city council on both the financing and the bond issues. So
On the project.
on the project, right? So,
Correct.
Go ahead.
Exactly right. That's exactly what we're going to run through tonight. This is good to go, Doug? Is it, need to do anything? Can everybody see this? There we go. Perfect. So good evening. My name is Dan Masiello, as you already heard, Senior Managing Director, I think is what they call me these days, Cosmo Financial Services. I've been working in the public finance space for about 30 years. And we are here tonight to sort of discuss where the city can go in achieving some of its stated goals. And for order of magnitude purposes, sort of the discussion that we're going to lay out or give the opportunity to evaluate tonight, there is about $1.5 to $3 million in new annual capacity for debt service payments. A lot of this had to do with that pension refinancing that Larry mentioned. The fact that the city was able to save so much money on out of its structural pension obligations, it freed up a little bit of space in the budget. And so here we are in front of the Budget and Finance Commission to discuss, how to achieve some goals that the city, some projects the city really needs to look at. So we've been working with the city for several years as a financial advisor, and we're estimating, I just noticed, I think there's a bit of a typo. We're probably looking at close to 25 million to 50 million in potential bond proceeds, depending on where interest rates ultimately come in, and we'll get to that in a minute.
Dan, quick question. The 1.5 to 3 million, how did you come up with that figure? How's that calculated?
So staff really directed us to use that number, so I think staff has a firmer grasp, but from where I sit and the information I have, that is literally the annual savings figure that was initially from the pension obligation bonds. As you might recall from the commission meetings, and some of you weren't involved in that, the first year's savings directly right off the top was like $3 million. And then the yield, the curve of the repayments was already very positively sloping. So just off the top of the budget by refinancing the pension, we were able to actually reduce that line item to free up some space. And so staff felt that this would be an appropriate number to discuss here with this commission. I think it would probably be also within the commission's purview to suggest more or less, but this is sort of the number we use to develop the conversation that we're looking to have tonight.
Just as a note to the commission, that 1.5 to 3 million this year we've already spent. So it's not money sitting there waiting to be spent. We've spent it. So,
And this is based on if future pension obligations were not to increase over time, which we would expect that they would, right? So this excess cash flow, for lack of a better word, is going to continue to decline over time.
So Again, this is more about, the budget has many demands on it, as you can appreciate, and there are a lot of moving parts. And staff has evaluated, in no small part, based in part on that pension refinancing, that freed up some, removed some stress on the budget. And again, there are other factors involved, which we can get into. But, for example, a brand new parking facility, just for example, would require a lot less maintenance every year. So, that would, by investing in it now, would free up cash flow on the other side of that equation where, maintenance costs would be reduced. So that sort of stuff. So I think that was all part of the calculus in determining, let's look at this amount. That is a number that would be comfortable in the scope of the budget as projected going forward. I don't have the granular details here tonight of what specific line items that.
I just think we have to be careful not to, one, keep spending the same $3 million that we saved over and over, and two, be aware of the fact that this excess money is going to decline over time. I like that you brought up that a new parking lot, for example, is going to save this amount in maintenance. But when I looked through here earlier before we met, I didn't see anything that showed with the projects we have. I only saw what looked like the gross cost, not what what that includes in savings. So we don't know that, not from what we have in the presentation tonight, right?
I think that's right. I think there's a deeper dive that has to be done. This is sort of to centralize where the conversation would go. And I think you make a good point. When we discussed refinancing the pension obligation, you were sort of boxing in what you owed based on that actuarial analysis at the time. But we always knew that even though we could make the box smaller in essence by saving it through the interest rates, by saving costs, we always knew that actuarial events would keep going, that could ramp back up. And so that point is always with us. So I think as you go forward and you start taking a deeper dive on what the expenditures could be, I think you have to circle back and consider all those issues. Ongoing pension exposure, the actual intrinsic savings of one capital improvement versus another, right, and then putting it all together in a plan that you could live with, supposedly.
All right, thank you.
So that's exactly right. We are here tonight to start the conversation, and that could absolutely take us to other analyses and requests for information. So, we would be happy to facilitate that. So this is really to sort of start the discussion. Those are the points chosen that, staff believes make the most sense to focus on. So with that in mind, with that dollar range, $1.5 million to $3 million, we ran some estimates. These were not looking good a couple of weeks ago. They ended up looking better. And then, then we had inflation reports today. So we feel that as of today, as we sit here, these numbers are representative of, if we were literally having a bond sale today, we believe that we would get an interest rate in the high threes. Wouldn't quite get 4% just yet. But for purposes of evaluating, sort of a stress test, if the market moves as much as another 0.5 percentage point, or either way, you see a range of numbers here. And so we really are keying in on, the lower end of that range. The $1.5 million a year would generate proceeds that a project could be about $26.5 million. If we were to go ahead and, commit to a full $3 million out of the budget, that project size could be as high as $53 million or so dollars.
Are we assuming tax exempt bonds here?
Their current tax exempt bond rates, the 375 represents tax exempt, correct?
And as you said earlier, when we did this last year, we paid 2.8 on taxable. So tax exempt at that time would have been what, around 2?
Redondo Beach, a AA paper, AA plus rated city might have been lower than 2% on a 30-year loan. Yeah, that is quite possible.
That's gone up 2% from 2 to 4, basically, in the last year.
And now you raise a good point. Absolutely. When you look at it that way, I mean, in Redondo Beach, probably a combination of luck and skill. We hit the trough, the low point of the market perfectly with the pension obligation bonds, right? And that was very fortuitous. Can't always hit the market like that every time. When we look at rates over time, we are still in an extremely low interest rate environment, believe it or not. It's hard to think that way when we could have had almost free money a year and a half ago, or so it would seem. But, in the scope of the last 30, 40 years, 3.75%. I mentioned earlier, I've been doing this for about 30 years. So back in the early 90s, a tax exempt rate of 6.5% was pretty typical. I was running estimated debt service schedules just like I did for this at 6.5%, 7%, tax exempt 30 years ago. So in the broad scope of, if there are 30-year projects undertaken now, and this is the cost of the money over those 30 years, we still are in quite a favorable interest rate environment.
Question.
Yes, Commissioner.
It's 3.75, so you're saying that's roughly a good number as of today?
Yes.
We're not issuing bonds today, right?
Correct.
Even if we got the green light to go ahead, or better way to ask that question, if the council gave you the green, wanted to move forward, about how long from now would we expect to be issuing these bonds?
Yeah, great question. So if this were literally the city council meeting that said go, 3 to 4 months would be the typical answer. 3 on the quicker side, 4 on the, a little more comfortable side.
So I don't think we have, nobody knows the future, but based on what we know today, there's probably very little expectation that it's going to go down 50 basis points. And I would almost want to see these numbers as plus 50 basis points and maybe plus 75 or a full percentage.
Sure. So we can absolutely provide this commission with all that data and information you'd like. I would mention some people such as myself happen to think the Fed is acting a little bit too strongly and they're raising rates right into a recession, and that would put us in a recessionary posture in about that same time frame, which leads to, generally speaking, lower yields. But when we are, again, sort of generally speaking, Larry and I are here tonight to help facilitate a conversation about what the city needs and how it can best achieve those needs and goals. To time the market in order to consider the issuance of bonds is a little bit of a fraught way to approach things. We don't really recommend timing the market per se. Now, we do, having said that, we absolutely keep an eye on the market. If we see something particularly onerous on the horizon, if we know a particular number's coming out, and we might want to adjust a sales schedule that's already on the calendar. But in broad terms, it's a little bit tough to sort of time that market. None of us has a crystal ball, unfortunately.
However, I think that because we're in the environment we're in, we can use a broader swath of numbers and so that we have at least, we're looking at 25 basis point bumps, 3, 4 of those, so we can all gauge where that might be, because this market is moving around. It just is. And
Yeah, there's no predicting it. I think to Chair Conroy's point, it's really more about a sensitivity analysis and just looking at it in a broader range than just the narrow
range.
band.
Yeah, I think points well taken. We'll do that, absolutely.
Yes, sir.
What will the additional debt do to the rating for the city?
Good question. So we just went through the rating a little more than a year ago with the refinancing the pension. And Redondo Beach has a very solid rating in the scope of your overall debt profile and the size of your budget, your economic and demographic factors, your wealth levels. This, in my opinion, won't do a thing. It will not move the needle. It will not be negative at all. It's not a very large issue, believe it or not. I know $25 million is a lot of money. But in the scope of the broader scheme of the types of projects that the city needs, the infrastructure that needs to be maintained, the economic impacts and how that would drive other factors that would help support the revenue base of the city, all those factors being combined, it is my opinion that the rating will be exactly the same. Redondo Beach, we'd like to see someday get into that just coveted AAA category. So the way, it's a little technical, take a quick detour. The city's issuer credit rating, if it were to issue what's called a general obligation bond, would be a AA+. There's only one higher rating, AAA, and that is a elite group, very tough to break into. A lot of things have to be just right for that to happen. So when the city sells its bonds, and if it's a lease revenue bond, which is a common way for financings to take place in California, the way the rating agencies apply the rating to what we'd call the paper, the bond itself, what an investor holds, would be one notch below the credit rating of the city. It would be a AA due to some technical factors such as it's a lease, so it has to annually be approved, and the fact that since you're leasing something, if you lose possession of it, you can't make rent payments anymore. So there's an inherent risk factor to an investor that's built in that the rating agencies recognize by dinging the rating by one notch. So that means a AA+ rating comes to a AA. So the ratings in any category generally have, like the AA category would be going up the ladder, AA minus, AA, AA plus. And then the next category up is AAA, the next category down would be single A. AAA has no gradings, it's just AAA. So A would also have A plus, A minus, and that sort of stuff. So I don't expect that these bonds with the kind of conservative structure similar to what we did with the pension refinancing, pledging of city assets that will be leased and leased back. There are no factors that I foresee that would in any way jeopardize that AA bond rating, AA plus issuer rating.
Commissioner Conroy, you have a question?
Yeah, quick question. If either of you gentlemen may know, do we have any expiring debt like this year or in the next 5 years that you're aware of that's going to help offset the additional debt service?
The only debt the general fund carries is that UAL refinancing.
Okay.
You have
Okay.
enterprise debt as well, but just the
Commissioner
pension
Castle?
debt, which basically moved from one line item to another, because
Okay.
debt is debt.
I was hoping maybe something was expiring. Okay.
No,
Right, sort of along those lines, this is fully amortizing over 30 years?
fully amortizing, assuming level debt service, so equal, almost, yes.
So in terms of refinance risk, that
Yeah, no bullet payments. This is envisioning a pretty standard, this was, I wasn't expecting to be quite so technical tonight, so happy to bring all this back. This is,
Budget and Finance
you're exciting me here. This is
fun for
great. The standard, and thank you for that question. So these numbers were run assuming a 30-year bond issue, fully amortizing level debt service. And that's it, an optional 10-year call feature, meaning that in 10 years, the city would have the right to call the bonds back with no penalty. These are all sort of standard features of municipal bond financings. Now, within that, there's bells and whistles and other things we can do to, change. Maybe we can do an 8-year call, things like that. We can, when we actually get into the transaction, we can discuss with the underwriter and what is the market looking for these days. But yeah, there's no balloon payments, there's no variable rates or anything like that. Fixed rate, fully amortizing bonds over a 30-year period.
okay, thank you.
You're welcome.
Do you know of any other city in the California or the South Bay that has a AAA rating?
Manhattan Beach has AAA rating.
Manhattan Beach, correct.
There are a couple of them, and we can get you a list. There are a few, especially here in Orange County. I think Irvine is AAA.
Yes.
Um,
It's a pretty short list. We can provide.
Pretty
you
short
one.
list.
Okay.
Okay, so this is sort of the range of, it's a big range. 26 million to 57 million, that's a lot of, that really can change the, discussion of which projects to focus on. So this is sort of the arena in which we're operating right now. And as pointed out, that, we will be happy to stress these even further. We'll show a 4.75 rate as well, 450, 475.
A follow-on question to one raised a moment ago. Is it possible for you to give us an idea of at what additional debt level would the rating agencies begin to question our rating? We're AA plus now. If we go to 100 million of additional debt, does that cause a problem? There's a point at which it does. I just don't know. Can we determine that?
Correct. Short answer is, probably. It really becomes a factor of what is serviceable by the city. So there are a couple of metrics. The rating agencies do look at debt per capita, and even though this is a lease revenue bond, it's still debt in that perspective. Debt per assessed value, in other words, your tax generating capacity, even though it's not a directly reimbursed from taxes, it's the operating capacity of the budget. What are the annual levels of revenues over expenses? What kind of structural budget issues would prevent, the ability to afford the level of debt that's being proposed? So if we were to go into S&P and say we're going to do another. So to back up half a step, we had that conversation when we did the pension bonds with Standard & Poor's. And always Standard & Poor's sees things, and there are good things and bad things about the way they operate. They sort of have their check boxes, they sort of have their silos. And even though the $250 million of pension debt was a debt, it wasn't bonds, right? And so the city had very, very low bonded debt before we did the pensions, and then we moved it from one line item in your audit report to another, and now it's bonded debt.
Yeah,
And
we're still debt. in
and the
first
rating
place,
agency
so.
called it out, said, oh, now they have a high level of debt. But we recognize that they're actually saving money, they improved their budget, it counterbalances, but they actually, if there was one negative that was brought up, it would have been that in their whole rating report. And we actually got on the phone with them for an hour and argued that, it's a bunch of baloney. Are you kidding me? We're saving so much money a year out of the budget. And they just, well, it's just the way we label things. That's their identification, their approach, their system. So having said all that, that's already a bridge that's been crossed, right? So it will come down again to that budget capacity. So if we went in front of Standard & Poor's with just a new $200 million deal in funding, I think that would raise some eyebrows, and we would have to really defend that. No, we have an ample resource. We have the capacity to make this payment every year. We have an extra $30 million in the budget because it'll be 10 times the size of this deal. And here's why. I think that, that would be pretty straightforward. But since, the last time we brought a $200 million plus issue to the rating agency, it was not just a fresh expense. If anything, it was actually a restructuring of expenses the budget already carried. So this would be new expense. And so the discussion with the rating agency will be, okay, yes, this is new debt, new burden, but we have the capacity and here's why. And we'll, technically show out the technical details of how the budget will work.
A hypothetical question, because if we proceed with this question may come up. Beach Reporter today just had an issue. They've announced that the list of state auditor, California state auditor, comes up with a list of cities that are in some level of difficulty. Redondo moved from 33rd on that list to 12th or 15th into the questionable category. And one of the reasons I think they dropped us was what you just mentioned, the bond issue. We showed $200 million, $225 million of additional bond issue, regardless of the fact that it was 3% versus 7%, and it's all good. There may be comments based on that we'll need to address.
Yes.
Absolutely. And that will be part of the transaction process, the preparation for the rating presentation, the analysis of, does this actually make sense? Does it fit within the budget? Was that $3 million that we saved already spent and then now it's not there anymore? Can we move this forward? So that, we wouldn't recommend moving the city into a position to jeopardize its bond rating or stress the finances at all. So, again, this number was a number sort of developed by staff with these questions in mind. What can our budget handle over the long term? And when we get down into analyzing if this is going to be affordable and how is it going to fit within the budget? Those are the exact items we'll have in mind as we undertake that analysis.
If you can revise this chart to show not just 50 basis points, but 75 and even 100.
Absolutely. We will be happy to send that along.
I don't think there are any prospects of minus 50 basis points. That's not going to happen.
Right.
Back when we first started working on this, we were going to come to this commission in August. And so this was July, I was working on this, and we had recovered a little bit. And so we were sort of I was hoping that we were on a down slope, but then, Mr. Powell has decided that rates should be going up a lot.
At least by the time you present it to council,
So just.
Absolutely. And for sure, and like I said, I feel very comfortable that the estimated market rates of 375, then that's a total cost of money, is pretty accurate for today. For, literally, if we had the bond sale today, that is a market rate. Normally, under normal market operations, a 50 basis point move between now and 3-4 months from now would be a very large move. Guess what? That has happened in the last year or two. So that is on the larger side, but no problem. Be very happy to go ahead and provide additional stress tests. That's not a problem at all. So
in September, inflation was a little hotter than expected.
it was high, absolutely. It just came out this morning, correct? So,
From the standpoint of attractiveness to investors, market attractiveness, a 3.75 for a AA rated municipal compared to treasuries now, or 10-year treasury is right at 4. That would still be very attractive in the market, right?
oh, absolutely. People will be lining up to buy these bonds. Yeah, there's no doubt. All right. Moving on. So this is sort of the hit list, the top projects that staff would like to have this body consider for discussion. Some of the items might look familiar. I'm sure some of you have paid attention to council meetings and maybe it's already been discussed among your group. We have no dog in the fight, to be a little crude, pardon me, in terms of what these projects should or shouldn't be. It's completely a policy choice for the city, which are the priorities, which are needed most, which would make the most sense to, what can be afforded within that range we estimated already. And so, like as we were saying on the previous slide, the low end of the range is, under these current circumstances, 25 million, and the high end of the range is closer to 57 million. So, that lower end, maybe it's closer to 20 million after the, another rate. Maybe it's more like 22 million, just kind of eyeballing what the effect of 50 basis points might be when we rerun our stress tests. So, Larry and I were at the council meeting, I think it was in June, when the presentation about the parking garage both parking garages was made and the level of investment that might be required to either rehab or reconstruct. So obviously there's some other projects that are being considered in the city. And so these are the items that staff has put forth for consideration. I presume this body has the power to consider something completely different too. I'm not sure what else the city's looking at, but
With your prior slide, the high end of it was somewhere around 57, 58 million, right?
my
Should we
recollection.
take that to mean that 58 million is the most that we would consider spending out of this list? Or that the city's considering spending from this list?
I'm sorry, I don't think I understand the question.
Okay, going back, can you go back to your prior slide real quick? All right, so best case scenario here, it drops 50 basis points and we can, and so we issue 57 million worth of bonds, right? And we're taking on 3 million of debt service payments, annual debt service, right?
Correct.
So my question is, are we to interpret that to mean that based on the numbers here, that that's the high end of what the city should consider spending? This is the high side of what, the bond issuance is what you're saying.
I
That's
think
based on the 3 million
that's based on the 3
of
million.
debt service.
Exactly,
Which they're saying is based on the savings. I guess one of my questions is, have you thought about looking at, I guess, a different way that for us to keep, to Justy's point, to keep the AA rating, to look at the ratios, like what is the ratio of debt service per capita or debt service to our revenues, and how much space does that give us? Because this is really talking about the space we have do we have 3 million, or maybe we have 10 million? I don't know, based on what our debt service is today, that we have to kind of keep this rating, and it would also help kind of justify whether this is the right number. Because I think also Chair Conroy pointed out, Chair Woodham pointed out that we already spent this money on additional projects.
Right.
So,
Well, my question is really, so the high end of this is 57 million, and then we're showing a laundry list of proposed capital improvements, right? So, and one of them was coincidentally about 57, 58 million. So does that mean if we were to make a recommendation on that it's like, well, that's the most money we could possibly spend, so we can't choose anything else? Or do we take that 58 million and say, well, we could do these two smaller projects? Is that what council is, or is that as a body what we're looking to do? Is say, first decide how much bonds we should be issuing and then how we spend it from that list? Because clearly we can't choose everything on that list.
but I think it's also hard to make that assumption when, one, I'm not entirely sure if 3 million is the right number. Maybe it's 1.5 million, or maybe it's 7 million. Like without knowing what the ratios are to kind of keep the quality of our debt at the same level, or even if maybe we want to go down a level. I don't know. I don't want to make that decision, but I don't know if these numbers are right, because I think the 1.5 to 3 million range feels like it was based on savings from a bond we issued a year and a half ago, and I'm not sure if that's the
So,
right.
no, I'm sorry if I was misleading in that. I'm just saying coincidentally, that the amount of savings,
Or I guess, how did,
Is
who
that
came up
literally
with
the
three? Who
calculation?
came up with this range, and I guess what was it based on?
My sense of the discussion at the city council was that there was some essentially capacity created by the refinancing, and that capacity got thrown into a budget discussion, which enabled, there were some one-time savings to pay off some one-time, budget
Projects.
cost centers. And the rest was to normalize that savings going forward, which essentially became a capacity number that said, look, if we can, based on our reconfigured set of finances and our current budget, basically afford a swing of somewhere between $1.5 and $3 million, and that could be leveraged to pay for X or Y dollars of improvements depending on the rate and other factors. I think that was the point, to give you a start point. I think everything you're saying, just as a finance guy, that you could look at what other capacity might be there or not be there, so that you can do two things at the same time, is figure out what it is you have to spend and figure out what it is you want to buy. I think those are both legitimate, almost siloed discussions in a way, until you put them together, right? Until you've done a satisfactory job of discussing both inherent savings in some capital programs versus pure expenditures in others. Budget capacity is one thing, debt capacity might be another, based on the stress tests we're talking about. So I think those ranges would get you to a point of maybe a conservative, moderate, more aggressive set of pinpoints using those new metrics or more comprehensive metrics. And then you go to the other side of the equation and go, okay,
Now, what do we want to put in there?
now where do we want to put it? And by the way, one other sub footnote is the parking structure has ongoing revenue, so maybe that's a net cost that could be looked at differently than just purely.
Exactly, because I think Commissioner Conway raised that, like what's going to create a net savings, what's going to be maybe a revenue generator, to your point, or what just, redoing. So I think expense.
I think you're really creating your homework assignment in this discussion based on what sort of notes they gave you to get started with.
Exactly, exactly.
Okay.
Yeah. Let me suggest this. You're giving us information that we have to have regarding the market. And then past that, we as a commission need to talk about what kind of a recommendation, if any, we need to make to city council.
Yes.
So why don't you finish your report, and then if you would, I would suggest you stay, because we may have questions of you based on the further discussion. But then we need to come up with some recommendation, or if we want to make a recommendation tonight. This is a lot to digest in one night. There are lots of issues.
Do you know
We
when
need
you're
we need to be
meeting?
concerned about inflation and its possible cost effect on the budget, because right now we have a balanced budget, even though we saved $3 million this year in financing. As we've said, we've already spent that.
So that's recurring.
Is both what we spent it for recurring? We know that the savings is going to be recurring, but that may be eaten up in both in projects and inflation on current projects. We've seen an increase in cost somewhere in the range of, in the last 2 years, of upwards of 15% or so in everything that we're buying. So that changes the possible use of that $3 million. That $3 million may already be spent and overspent going forward. And that's something we'll need to be talking with city council about. So we're not going to be able to reach a decision here tonight for sure, but we need to get as far as we can. So
Absolutely. You raise excellent points. And, I'd just like to mention that, those analytics that were being discussed really would need more of a target, right? So that's kind of where we're here, like, okay, what happens with the parking garage example? Well, we have revenues, we would reduce expenses. What would that whole picture look like? That was a little beyond the scope of why we're here tonight, but that would absolutely be the next step we would undertake. And I'd also like to just kind of point out that inflation hits the expense side of the budget pretty hard, but it also helps the revenue side as well. Your sales tax base goes up, as homes sell for higher prices, property taxes are increasing, so TOT taxes go up. So, the whole picture, both sides, will this $1.5 to $3 million number still fit in the next iteration? That is an analysis we'd have to continue as part of this process. So, again, this was sort of a starting point for a conversation. What does this commission think that would be projects to undertake? Should the city, want to find an alternative method? Most of the city's capital improvement plan, to my understanding, is a pay-as-you-go prospect, that you really set aside a lot of money every year out of your current budget to make the investments in the infrastructure. And some of that's a little bit hard to manage for projects of this scope that we're talking about. That would be an awful big increase in your budget to pay for the police station in one shot, right? That's a little hard to accomplish. And these are not sort of boondoggle type projects. These are core city service infrastructure projects here, for sure, based on what I see. So that's really how we see the conversation going tonight. So,
Do you know when you're presenting this information to City Council?
I don't know if there's.
I don't think there's a set
calendar?
schedule.
Currently, there's nothing planned in the near future that I'm aware of.
Okay, thank you.
I really think that you're asking all the right questions and trying to establish the appropriate exploratory parameters. And
Right.
we anticipated this would be a start in the conversation and we'd be back so that you can have a game plan, so to speak. And that's probably going to take, as the chair said, some conversation with the council at some level and a deeper dive on both the expenditure and revenue side, as well as just the debt environment. So it's a start.
Yeah, I'm glad this is a start and we have a little time to digest this,
Yes.
because sometimes we get presentations and then it gets presented to council within the week. So, okay, thank you.
Well, they say on the back page, ASAP. I'm not sure what ASAP means. Their commission's recommendation would be brought to the city council ASAP. ASAP.
Well, as soon as possible. It wouldn't be possible until this body finishes its analytics, right? So
ASAP, depending on who's saying it, can be anywhere from tomorrow to 6 months from now.
Yeah.
Exactly right.
Question on firms that we'd go to market with. Is that about the same cast of characters that we looked at when we did the bond issue a year ago?
that's the current recommendation of staff to sort of, keep the band together, move forward with it. Because we, as you're aware, Chair, we had a very thorough vetting process to assemble that team. And now that team also has the benefit of the knowledge of the city and its operations. And the very questions you've been asking here tonight, how would the rating be impacted? How would the market accept the bonds, those sort of things? They would be ahead of any learning curve to hire any new team, but that's certainly not out of bounds either. If that's the recommendation this commission would choose to make, that's entirely up to you.
Right. Okay.
Yeah, and so that's really the highlight, this list of projects to consider. And as you mentioned, the last page should point out, if, what we see as the next steps, and this is sort of fluid. This is, again, just sort of a suggested course of action that would be the normal progression. So we, this commission is being asked to provide input on a potential new bond issue and what projects would be identified as preferred. Should the city even issue the bonds, and if so, for which projects is really the core question here. And with your chosen recommendation, we might need to come back next month before we go to the council, and we certainly can do that. Be happy to come here. It's the third Thursday, so is that the week before Thanksgiving next month? And as soon as this body's prepared or comfortable to make its recommendation to the council, and if that recommendation involves moving forward with financing or obtaining financing for any of these projects, that process can begin forthwith, and that would be about 3 to 4 months from the go signal, so to say, and that would put us somewhere maybe in the late winter, early spring, depending on how many more of these meetings we have and what sort of analyses we would bring back for you to consider again. So that's really all we had to present to you, but we were happy to, we are here to answer your questions, and obviously there are
Be a resource.
a lot of smart people up here bringing all the right questions out to discuss, so.
You said something I found interesting as far as, if I heard you correctly, most cities set aside money and save up for these large capital projects, correct? So
They try to.
they try to. Doug, perhaps you know, do we have any of these reserves set aside for these things?
Sorry, I'm not familiar with that. I can answer your question.
Okay. Mel? You're
I
the
was about to
resident
ask
expert.
exactly the same question. I thought about it two different ways. First of all, I don't think we can make a lot of decisions based on the entire conversation about how much can we afford to spend. And that $3 million number was a great number last year, but it's already been spent and it looks like it's been earmarked ad infinitum. Sure. So that means we really don't have extra money to spend. It's got to come out of the budget somewhere else. So I guess my first question is, of the list of items that we saw, is there a priority schedule? Because I only see two there that could have any revenue generating or offset in them. Everything else is just sunk cost. This is a police station and fire stations that needed to be replaced years and years ago. So I would hope that someplace somebody squirreled away money hoping that we were going to get enough, and now we just need the excess. So I think we need that number. We need to know if there's money that's been put away.
I think we can assume that there has not been.
Likely a safe assumption.
Yeah.
Good time to start.
We want to validate that,
So priorities, has there been any money set aside? Where are we going to get this $3 million? Because for me right now, I have to go on the assumption that that money's already been spent, so we can't spend it again. And the point about inflation and revenue growth as a result of inflation, we all know that revenue growth due to inflation is going to lag significantly behind expenses. So I wouldn't even factor that in as a consideration in how are we going to go about financing this thing. We asked about, as the commission, we asked about these things 4 or 5 years ago, when interest rates were continuing to decline, and the question was, can we do some of these things? I'm just kind of amazed that here we are on the backside of the curve, and yes, from a systemic historical perspective, rates are still low, but they were much lower, and we had a much better opportunity a while back. I don't know where to go with this until we get some other answers.
And the question is, who should provide that information to us? For instance, looking at these projects, the 6 projects listed here, the one that sticks out to me based on information that we had presented to us during the budgeting process, the most critical would seem to me to be the pier parking, because the pier parking garage is in danger of not being a parking garage anymore unless it gets some substantial annual investments or a big investment initially. So that may be one where we could in fact say that the investment of 20 million saves us money over the years because we're no longer having to put that money into it. But that's something I'm not qualified to answer, but we need someone to come to us and tell us that.
And I think to that point, Mr. Chair and Mr. Commissioner, to your point, that's sort of my understanding of what this exercise is that let's say we have 1.5 to 3, and that number I don't believe is actually determined for a fact yet, but it's a number that staff has worked through and believes is realistically available to be deployed. Why, which item are we not talking about? Did we double count it already? Those are pretty specific budget questions that I think as part of this process unfolds, we would absolutely need to get into and get deeper into and discuss with this body and the council. So let's just assume that that number is valid. Question to this commission, what is your priority? Which projects here, assuming that we could afford this debt service payment and that we do move forward and the city wants to, what would the recommended priority be? That's sort of how I saw this task and assignment to discuss tonight.
To their point, I think we would need more detail on a project-by-project basis, similar to what we do with the budget.
We would
talked
know-
about all the extra projects. We got kind of a paragraph
Mr.
written
Chair.
about it. The city manager walked us through it. Those type of things, just more detail on it.
Mr. Chair, so far, just so we get the instructions right, I'm collecting these comments. I'm thinking, one, we need some in-depth understanding of the reserves that may be available, either by project or generally, number one. Number two, we need some validation of the ongoing availability of 1 to 3 and the validation of the 1 to 3 in the first place. But just assuming that's a placeholder number just for this conversation, is it really now 752.75? And what's the longevity of that? I mean, is it consumed now or is it not? So I think that's a second piece of homework that we need to get back to you. And number 3 is, in terms of as Mr. Mastiello was talking about, priority of improvements, I think you would need basically some fundamental information about, one, is there any, for example, on the parking, the city's been making some interim improvements, right? So are we eliminating that interim schedule by fixing it now? What would be the revenue forecast a bit, so we understand what's that net investment, right? And then on the non-revenue, again, where did that number come from? What's that budget? And is there ongoing maintenance dollars for that? Or is there an additional financing that we have to provide to sort of keep those investments where we need to, at least for the short term? So you'd want some fill in on not only to get to a priority, just a status of those objective payments and what they represent. I think that we would have to get to you.
Offset the debt payment.
That would offset the debt payment. So I think those are 3 pieces, but there are going to be more, I get it, but I just want to make sure that we're all good with those 3.
If we could also get, in terms of our capacity to raise additional debt, even if
Yes.
it's more than the $3 million,
Yes.
because if we just look at the 1.5 to 3 with higher interest rates, and we are only able to raise $25 million, suddenly all of these projects aren't an option other than the parking garage. Could we raise 60 million and do 2 projects? What's our capacity to do
Right,
that?
and some of that was tied to the earlier point, which is there, do we have debt capacity based on sort of a rating, so where we are on the rating scale, and is there room there? Is there margin for us to count on something more than saying the 1.5 to 3 is really there? Is there still more elasticity, if you will, to that based on what we could do in the debt market, based on our rating and other factors? So I think we have that as an overlay analysis as well. So that's a point 4, is what I saw it.
The only other thing that I would want to bring to it as far as prioritizing one thing over another here is health and safety. And just looking at this list, I see the potential for a safety or perhaps a health concern would relate to the parking garage and the Seaside Lagoon.
Yes.
I think we can also look at maybe establish a cap for interest rate and the amount we want to borrow. Once we establish that, then I think we can decide how many projects will fit into the overall spending. So we can look at it from both sides. And if you can look into your crystal ball and see what the rate will be 3-4 months from now, then what is the maximum we want to go up to? And then what's the maximum amount of money we want to borrow? If we can establish those 2 key points, then I think the rest of the projects will fall into place. Then we can ask the city council to give us their recommendations on priorities.
If we even want to go into additional debt, I mean, you guys mentioned the rating of Manhattan Beach, right? Our neighbors here. Maybe do they have any types of bond issuances for projects like this? Or are they like the cities you mentioned that pay as they go and save up for things?
I haven't looked at Manhattan Beach's CAFR for a while, but they've been basically pay as you go. They did a refinancing of the pension obligation. So did El Segundo. El Segundo also had a pretty high rating. I thought they
might be AAA.
I think they're AAA as well, now that I recall. So
It sounds like pay as you go is a good way to get to that AAA rating if that's a goal for the city.
exactly, that's the standard. It's like you get credit because you don't use it, so to speak. It's no different than, sort of the rest of us, right? So, I would always explain that to my city councils, my city managers. These are not that different in a way to a FICO score. You kind of get, these are city FICO scores in a way.
I would propose this to the rest of the commission too. I think another potential avenue is if if we did recommend doing any sort of bond issuance for something like this, that it should be in connection with the city establishing in their budget, setting money aside for future projects. If they haven't been fiscally responsible or have the ability to set aside money in the past, that become a priority.
Or go to the second tier of these projects and start setting money aside right now so we don't revisit this again in a year. I'm not opposed to using debt to solve some of these problems, even if it does affect the credit rating. Yes, it affects our interest rate, but if these are truly critical fixes, fire station modernization, if the fire station isn't big enough for the fire truck, you need a bigger fire station. And that's just the way it goes. Or if the police station doesn't do its job, then you need a new police station. So it's just, that's the way it is. But we do have to get much smarter in the way we handle our fiscal responsibilities over time.
Couple of suggestions. Again, looking at the list of 6 items, there are 2 that stand out as far as being more immediate to me at least, is, as I mentioned, the parking garage and the possible fire stations. I'm not sure what's involved with the fire station modernization. Do the problems we're facing keep us from putting out fires? Then we really have to spend money on doing that. We're living in current city hall and current police station, and so I assume that that's at least serviceable for a while. That may not be as high a priority as the parking garage potentially falling down and the fire stations not being able to put out fires. But again, that decision is something we need the city manager and the Public Works Commission sitting here giving us data on how much we're spending per year on the parking garage now and the trade-offs between basically remodeling that and continuing to do annual fixes. So again, I'm struggling with exactly what we should do as a commission tonight. I think what I would propose is we ask those 2 folks, those 2 groups to be here at the next meeting and we come to some resolution of this. I'm still of a mind that we don't have the $3 million. In the first place, we don't have the $3 million because with the combination of inflation and the spending that we've already set in, we've spent our savings. Mm-hmm. And so we're going to have to come up with saving some other way. And the parking garage improvements may pay for themselves. So that may not be an issue. But again, we don't know that now and we can't determine that now. So I think we need to decide, ask the city manager and the Public Works directors to be here at the next meeting so that we can address these issues. How does that sound?
Great.
Sounds good to me.
Yeah. I think that's the purpose of this meeting, is to figure out what all information we need.
Yeah. And we know some of what we need, and those folks are the ones who will give it to us, who can give it to us. Mm-hmm. We've talked about capital markets tonight, so we know what we can do in the range of somewhere between 25 and 50 million. We could borrow today if we had the $3 million in savings. Correct. Or we could come up with an additional $3 million in savings. That's good information to have. So that sets a parameter. Again, as I look at these, the parking garage and the fire stations all of a sudden become possible if they have to be done. The other things I think they may need to be done and we may like for them to be done. But personally, I don't think we have to have a new city hall. We just have to have a serviceable city hall. And the police have to have serviceable facilities as well as the fire department. But one of those may be a higher priority than the other. So let's address that. I would propose that as a motion, that we table this issue to the next meeting, ask the city manager and Public Works director to be here, and let's discuss this at that point.
And do we give them a checklist that we're talking about here so that they're prepared? Or how would you like to go about requesting?
Yeah, we can.
I would be fine in empowering the chair to discuss with them directly what we're looking for and do that. I think you can articulate what we're looking for.
The current chair or the next chair?
I was trying to get you off the hot seat.
I know, Cosmo, you had recommended, you kind of bulleted like the 3 different categories, one of which was talking to the city manager and getting details on this. So I don't know if you'll be in contact with them.
Yeah, I was going to ask the chair and the commission if they would be okay with us taking this laundry list of questions and concepts so that as a preamble, then the chair, of course, could reinforce that, but at least they would hear that message from us. We understand.
I think we're open to that. I think it would be advisable for the chair to see what you're planning to present to council, or excuse me, to the city, to staff, just to make sure that we have a comprehensive list of what we're looking for.
We'll bullet out these points that we talked about and give it to the chair, and then that would be the script that he could use and we could use. We'd be on the same page. I think that's a good way to go.
That'd be perfect.
Okay,
Sounds good.
that sounds like an approach. Good.
I second your motion with the modifications that we just discussed.
Oh, okay.
Well, Doug's going to need it presented better than that. So somebody want to present a motion?
So the motion would be that we move this forward to the next meeting, ask the city manager and director of public works to be present.
Prepare a letter
Yeah, do a letter to them.
in
And
conjunction with Cosmont.
Cosmo will prepare a letter.
We'll prepare the points of the letter, and then you can move forward, and we can support that effort.
Can I just make one point? In regards to scheduling for the next meeting, there will be another regular meeting in November, but I'd have to ask city manager and public works director if they're going to be available to meet.
yeah. And if they're not available at that meeting, but they're available at other times, then we can poll the committee to see if we can perhaps, because this is something we need to do, and we need to have that, make that meeting happen, so that we can change our meeting date if we have to.
Date or time, yeah. We'll get quorum there.
Okay. Do you understand the motion?
Yes.
Yes.
Do we need to do a roll call?
We can do a roll call, sure.
Yeah.
Okay.
And Mel, you seconded that?
I second.
Okay.
Commissioner Conroy,
Aye.
Commissioner Jesse,
Aye.
Commissioner Castle,
Aye.
Chair Woodham,
Aye.
Commissioner Marin,
Aye.
Commissioner Samples.
Aye.
Okay. Thanks for your presentation. This is very helpful.
Very much.
For your time, I'm happy to be here. We'll see you next month.
You guys do good work for us, by the way.
Appreciate that. Thank you so much.
Pleasure working with all of you.
Okay, now we come to the fun part of the evening where we
Election.
we're selecting new officers. J1. In the past, the procedure has been that as new folks come on the commission, they're put in the queue. Jason and I came on at the same time. He was chair, I was vice chair. And then you came on next, you became vice chair. Unless there's a revolt and among the commission, I suggest we follow that. You would become chair, and you're the next newest, you'd become vice chair. Is that agreeable to everyone? Especially to the folks who would be chair and vice chair?
So do we need a nomination?
I think we
Is that how it
do,
works?
yeah. But I just wanted to discuss that process first, because it's, apparently that's been the process forever, for a long time at least, so, and I'm fine with it.
Yeah.
Chairman is a fun position to have, but essentially you conduct a meeting.
Yeah.
And other than that, everyone has the equal say and vote and discussion in what we're doing. So,
As long as people have patience as I try to figure out the procedure of opening motions and seconding and all that stuff. I'm still trying to figure that out, but
well,
I'm in.
okay.
So
Any other discussion? Any other nominations?
I just want to formally nominate Commissioner Marin as chair, and Commissioner Jeske is vice chair.
I'll second. Nope.
Made and seconded.
Sorry.
Get a roll call?
Commissioner Conroy,
Aye.
Commissioner Jesse,
Aye.
Commissioner Castle,
Aye.
Chair Woodham,
Aye.
Commissioner Martin,
Aye.
Commissioner Samples.
Aye.
I would give you a gavel, but I don't have one.
I might buy one.
Okay, I think we can move on now to,
I'm sorry,
member
I'm sorry to
items.
interrupt. Can I make a couple points just for the record? On your previous item with the presentation from Cosmont, there were no e-comments and there were no Zoom comments regarding
Okay.
that. Again, and for your second item, for item J1, again, there were no e-comments and there are no Zoom comments.
okay. Good, let's go down the list. Any member referrals for staff?
I just wanted to ask, how are we coming on finding a replacement director of finance?
Currently, I know that there hasn't been anything opened in terms of finding a new finance director. The city did open up the assistant finance director position, which was listed. I think the city's approach was they're going to start with a new assistant finance director first. And I don't have a timetable of when the search for a new finance director is going to take place.
So we didn't previously have an assistant finance director, correct?
We actually currently do have a assistant finance director. She's currently filling the role as a acting finance director at this time. But my understanding is she plans to leave at the end of the year.
Okay. And who is that?
Lori Yamasaka is the assistant
Okay.
finance director, acting as the finance director.
But not for our meetings.
No, I'm filling in to do the meetings at this time.
Okay. That's all I had. Thank you. Oh, and also, welcome to our newest commissioner, Commissioner Castle.
Thank you.
Vijay, any referrals to staff? Any comments for staff?
If we can get the Assistant Director of Finance in the same meeting that we are proposing, that might help. But there may be some budget issues that city manager may not be able to answer some questions.
Okay,
It might be harder to find a time that all three of them can be here.
Well, yeah, let's give it a try if it is possible.
any comments?
No,
Any
no
thoughts?
comments. Thank you.
Question, you and I talked about this by phone. Does it look like we'll have someone from CalPERS here in December?
Yeah, we reached out to CalPERS to see if they could have someone attend a meeting. They told us they would have someone out here in December for the December meeting. So that's what we're anticipating at this time.
Okay, good. That's all I had.
I have no comments.
Well, first, I'd like to welcome our newest member. I'll just, only because I'm the old guy here, want to point out that the method that we use to select our new chair and vice chair is something that's become kind of a tradition, but it's not something that has to happen. It has not always followed that path. So don't turn it into something that's institutional if it's more beneficial for the commission in time going forward. I'm curious, and I'd like to hear something next time regarding the discussions that we've had regarding purchasing, finance, policies, procedures, and how that's being handled and going to be handled until we do get a new purchasing director or a new finance director. It sounds like there may be some turmoil in that department. And we've been concerned about purchasing procedures for a long time and the other studies and internal controls that are going on. I'd like to hear a little bit about that next time.
Okay. I don't want to make any promises about what we're going to be able to bring to you next meeting. I will list it and it'll be considered. I can't promise any of this time. I want you guys to know that our department is currently in a transition. We do not have a finance director. We lost our payroll manager. We're in jeopardy, or we're not in jeopardy. We anticipate losing our assistant finance director at the end of the year. And we are currently conducting our annual audit starting next week. So
Okay.
we've got a lot going on. I'm not trying to brush anybody off. I just want to be realistic.
Put my request on hold.
What's going on with the department right now. So I appreciate your patience.
Put my request on hold. I understand.
Yeah, you'll have your hands full for a while.
Thank you. Thank you.
I think you guys should suggest building a new city hall. My office is kind of small.
Expand it, knock the wall down.
Yeah, I just, this isn't a referral, but I just want to, another tradition that we have around here is typically when new people come in, they are given the opportunity just to kind of introduce themselves and give us a brief background. And we had guests here. Normally, we would have done it right after the swearing-in ceremony, but if you wouldn't mind, I'd love to hear a little bit more about you.
Sure. Just by way of background, I was a finance major at the Wharton School at the University of Pennsylvania. I was an investment banker doing corporate finance for about 5 years in New York City for UBS and Credit Suisse, and transitioned over to commercial real estate. Outside of my commercial real estate brokerage, I've also spent a lot of time volunteering. So I was a trustee and treasurer of a private school on the Upper West Side for about 7 years, and then moved to Redondo about 10 years ago and was on the board of the Redondo Beach Ed Foundation for 5 years until January of 2020. So I've had a lot of experience in finance and nonprofits and actually tax-exempt bond financing. We actually did one of those in New York to finance the purchase of the building, the school building, and an expansion next door with New York State Dormitory Authority. So
you're primarily in commercial?
commercial real estate, yes.
Good.
Impressive.
Thanks to have you.
Yeah. Good experience.
Good addition.
to have.
Thanks.
Okay.
The rest of
we
us,
have a-
the rest of us have a hard time balancing our checkbooks.
Do I have a motion to adjourn?
So moved.
Second.
All in favor?
Aye.
Okay.
Good night.
Thank you, Doug.
Thanks, Ed.